Hi and welcome to Swissquote's Daily Market Talk. It's Thursday, November 28th. Yesterday's packed US economic calendar didn't throw any surprises at Fed watchers. So US yields and the US dollar slipped, while major US indices pulled back from their near all-time high levels. Over in Europe, the political drama in France and mixed signals about what the European Central Bank might do next, kept sentiment quite shaky, with the US taking the day off for Thanksgiving, while Europe will have to hold the fort and deal with its own issues. So appetite was limited yesterday on both sides of the Atlantic Ocean. In the US, the crowded economic data came in mostly in line with market expectations, confirming that the US economy grew 2.8% in the third quarter, mostly explained by a robust 3% growth in sales. Then price pressures were slightly higher than expected by analysts, but remained below the 2% mark, as core PCE prices for last quarter decelerated faster than expected. Now, core PCE prices for October, however, posted a small uptick from 2.7 to 2.8%, parallel to market expectations, and the initial jobless claims in the US came in softer than penciled in by analysts. Overall, there was no big surprise in yesterday's economic data from the US, and the latter gave comfort to investors that the Federal Reserve will be cutting the interest rates by another 25 basis points when it meets in December. So that probability of a 25 basis point cut in December advanced from around 65 to 68%, and the US 2-year yield tipped a toe below the 4.20% level. But the lower yields and the first day of ceasefire between Israel and Hezbollah couldn't really convince investors to buy more of the US equities at all-time high levels into the Thanksgiving holiday. So the aggressive reaction from both Mexico and Canada to Donald Trump's latest tariff threats certainly came as a warning of higher business costs and lower profits moving forward. As such, the S&P 500 closed Wednesday's trading session a few points below the 6,000 psychological mark. Nasdaq 100 retreated 0.85% as Dow Jones Industrial Index closed the session in the negative, but after having hit a fresh record high level. Microsoft dropped more than 1% yesterday on fresh news that the FTC opened a fresh antitrust investigation into the company, drilling into everything they said. Yes, everything that the company does, while Apple resisted to the news that its iPhone sales barely grew this year as Android-based rivals gained ground in China and in other emerging markets. Now, I saw Bloomberg writing that it's certainly because of lack of innovation at Apple, but I generally think that it certainly has something to do with the monstrous price gap between the iPhone prices and the rival Android-based phones. Anyway, that's for the US. Or almost. Nothing major happened there except for a 110% rally, guys, in a company's stock called Unusual Machines that produces drones, apparently. And that rally was on news that Donald Trump Jr., yes, the president-elect's eldest son, has joined the company's advisory board, reminding everyone the need for drones is obvious and that it is also obvious that the US, must stop buying Chinese drones and Chinese drone parts. But the company reported a meager revenue of $3.6 million for the 9 months through September, and funnily warned in a regulatory file that Donald Trump's proposed tariffs on China could eventually affect their ability to source drones critical to its B2C business. So, welcome to Meme Trading 2.0 and happy Thanksgiving, everyone. Now, over in Europe, things were much less fun, as it is usually the case, unfortunately. The STOXX 600 index extended losses yesterday, and not only because of the tariff threats from the US, but also on the rising unease in French politics, where Marine Le Pen, the far-right leader in France, who actually gained some good ground in the latest elections, remember? Well, she threatened Mr. Michel Barnier's administration, that is, right now doing everything in their power to control the country's deteriorating finances and deficit, that she would bring his government down with a no-confidence vote if he doesn't respect their budget demands. Ouch. So, it is quite needless to say at this point that the spread between the French and German 10-year yields is rising yet again. And that even though Germany has its own political problems, mind you, right now, and is preparing itself to hold a snap election because people there are not necessarily happy with Mr. Scholz's government either. Now, thank God, the growing French headache, remains localized, at least for now. The French CAC 40 index underperformed its European peers yesterday as French bank stocks took a hit on this rising political chaos in France. But the euro-dollar rebounded well past the 105 psychological level and even advanced near the 105.90 level yesterday, following the other majors up against a broadly weakened US dollar. So the worsening political picture of France could eventually limit the single currency's upside potential, along with these clashing opinions at the heart of the European Central Bank, as the ECB members, they don't really know how fast the bank should be cutting the interest rates, because yesterday the ECB's Schnabel said that the borrowing costs in the Eurozone are no longer at a level that restrains, that constricts the economy, while Luis de Guindos, said just a day earlier, that more interest rate cuts were on their way. Now, one thing is clear though, while German representatives often sound more hawkish than their southern counterparts, Germany's economy arguably relies on European Central Bank support right now and much more than any other in the Union at this point in time. So let's see how all this plays out. But for now, the euro-dollar does have potential to extend its recovery following an aggressive sell-off that we saw in November. So today, Germany and Spain will be revealing their November early CPI figures that are actually expected to print an uptick in price pressures this month. So if that's the case, if this week's CPI data points at revived price pressures in the Eurozone, the ECB dose could lose ground and let the Euro bulls gain some field. And even more so as the latest rise that we see in European natural gas prices will somehow impact the inflation numbers in the coming months. And Europe is said to be facing the coldest winter since Russia invaded Ukraine and since the continent's countries gave up on their Russian energy supplies. So that means that the gas reserves in Europe will decline faster than otherwise, adding a renewed pressure on gas and broader consumer prices. Such situation would limit European Central Bank's rate-cutting plans and throw a floor under the euro's weakness. Now, the next important target for the euro-dollar's recovery right now stands at 106.72 level, which is the major 38.2% Fibonacci retracement on September to now sell-off. Elsewhere, the dollar yen has benefited grandly this week from a broad-based US dollar weakness to extend its retreat to 150 psychological level yesterday. However, note that, released earlier this week, the Bank of Japan's core CPI measure actually eased unexpectedly to 1.5%, a number that doesn't necessarily back the BOJ normalization bets. Now, Japan will be releasing its latest inflation figures while we will be sleeping tonight. So if these figures don't meet the market expectations, if inflation in Japan remains softer than expected, then the Japanese yen bears will have room to rebound from the actual levels. And I believe that the yen bulls need a concrete hawkish sign from the Bank of Japan to send the dollar yen below that 150 psychological level. Otherwise, there is a greater chance that we see a rebound from the actual levels. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope This episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.